Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where you get everything you need to know in 90 seconds at 9 o'clock with news of rising deficits everywhere. First up, the US Fed meeting has kept its policy stances unchanged, saying they're delivering moderate growth and improved employment, but they are worried about weak business investment and weak exports. There was no explanation from them, however, of their recent heavy repo market activity. Meanwhile, data for the American December trade balance worsened, delivering a mercantile trade deficit of $68 billion in the month and taking the annual deficit to $860 billion, or 4% of GDP. December exports were flat from November and imports rose 2.5%. And speaking of American deficits, the US Congressional Budget Office has issued debt and deficit projections for the next 10 years. They say the US federal budget deficit will be $1 trillion in 2020 and will average $1.3 trillion per year over the next 10 years. And for more deficit news, Boeing reported its first annual loss since 1997 of $1 billion as the 737 MAX costs now exceed $18 billion. It also said it would make further cuts to the production levels of its largest 787 Dreamliner aircraft, currently its main sources of cash. And American housing sales skidded almost 5% in December in a surprise pullback. In China, even though financial markets are all closed, eyes are turning to the scale of the financial impact. The SARS experience is the main point of reference, but 2020 China is vastly different to 2003, and this time the official response has been far more aggressive once it got going. The central bank was already in liquidity supply mode for the Spring Festival holiday, but what could be required now could exceed $1 trillion yuan, and they seem primed to deliver that or more if required. Banks are expected to struggle when markets reopen. Many of China's neighbours are also expected to suffer sharp economic pain as well. Further, anti-Chinese sentiment is growing in many of these countries too. In Australia, consumer inflation picked up marginally to be at 1.84% for all of 2019. But Australian retail is in bad shape, with more stores and chains pulling the plug after a disappointing 2019 holiday shopping season, and more will follow. The US Treasury 10-year yield is back lower today, down 2 basis points after yesterday's rise, and now under 1.62%. Gold is little changed, now at $1,570 an ounce, but that's up just $1 in a day. And US oil prices are little changed as well, now just under $53.50 a barrel, while the Brent benchmark is just over $59.50 a barrel. But pricing hasn't yet reflected a big jump in US crude stocks. And the Kiwi dollar is fractionally lower at 65.2 US cents. On the cross rates, we've held at 96.7 Australian cents, and against the euro were unchanged at 59.3 euro cents. That leaves our trade-weighted index at just under 70.8. And Bitcoin is still rising, now at $9,332, and that's a further daily rise of 4%. It's also back above 14,000 New Zealand dollars for the first time in 2020. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.